All right, I'm going to do a little bit of follow-up on the Linda Raschke opening range that was shared by Blue Steel a few days ago. Just to review, she uses the 8 a.m. Eastern to 8:20 a.m. Eastern as an opening range. She argues that 8 a.m. is when the institutions, the big institutional traders, start to take an interest in what trade is going to do that day. So I did not watch, I will be watching it. I have not yet watched the video link that Blue had posted. I know he mentioned she's using 5-minute bars. And the reason I didn't watch it yet is I wanted to look into this 8 a.m. to 8:20 a.m. Eastern Time opening range on my own without having any other ideas in my head from Linda Raschke or anyone else. Like Blue, however, I have a lot of respect for Linda Raschke. And of all the so-called trading wizards, trading educator, guru, furu vendors, she's my favorite, probably. She really is. Very original thinker, data-oriented, rule-based oriented, yet understanding that there's a virtue to being both rule-based and unautomated. In other words, not automating trade. She refers to that as being discretionary, and I don't believe that's really accurate, because she does have very strict rules in almost all of her setups, as far as I recall having looked into over the years. There is a virtue to being a manual point-and-click entry trader over pure automation. And I have yet discovered the words to really communicate what I'm seeing or feeling. And the best example I can give is I continuously see people posting to the Price Bob thread that the MeBob strategy, for example, and just to be clear, fixed bar interval trading is the method. Everything else, all the variations, are strategies of deploying the method. So MeBob is not itself a method. I may have misspoken in the thread and referred to it as such, but fixed bar interval trading is the method. MeBob is one particular strategy of what's likely an infinite number of possible strategies one can use to deploy fixed bar interval trading. So back to the automated manual discussion real quick. I have seen any number of Forex Factory members post to the thread that MeBob isn't profitable. MeBob doesn't work. Here's this chart showing the back testing that it's a very minimal reward or even a small loss over a period of time. Here's a strategy showing a Monte Carlo simulation of the MeBob, a martingaling the MeBob. And yet we have other members posting that MeBob has allowed them to turn their trading around, post their first profitable month, 2 months, 3 months in a row now, passing evaluation accounts with prop firms. They're no longer paying reset fees week after week, blowing evaluation accounts. They're now funded traders, making money for the first time in their trading career on MeBob. What's the difference? The difference is there is some intangible element that you're going to miss by relying fully on the artificial intelligence of a computer algorithm, because it simply cannot, at least not yet, fully appreciate and adjust for actual free market conditions. And that's a fact, Jack. So I don't know what that intangible element is, but for every person who posts to the Price Bob thread that they can't make me, Bob, work, my response is, well, you're not really committed to it. You really have to commit to it. You don't have to commit to that particular strategy, but there are people who have committed to it and are making consistent profits for the first time since they've started trading. And you don't have to do me, Bob. You can do any fixed bar interval you would like. Could be a 15-minute opening range breakout. Could be a randomly selected breakout around the open of either the Frankfurt Exchange, the London Exchange, the New York Stock Exchange, Tokyo. No one has posted anything about trading, say, Nikkei futures or Hang Seng futures, but I'm sure that there are probably phenomenally profitable edges using fixed bar methods that can be applied to those markets. And so I'm going to give an example. I'm going to look at Linda Raschke's 20-minute opening range on the ES. It's a 20-minute opening range starting at 8 a.m. New York City time, ending at 8:20 New York City time. And the way I'm going to do this one, not going to take the time to type everything into an Excel spreadsheet. I will be doing that. But this is one way I've used over time. I've borrowed it from the blackjack card counters. What I'm going to do here is I'm starting on June 2nd, first trading day of June, going to go through to the end of trading on this past Friday. Long only, using this risk reward tool. Even if price breaks below the low of that range, I'm still only measuring risk and reward off of that 20-minute range. This is going to be long only. So this is not a short. This is where a long is entered. This is the stop loss, the bottom of the opening 20-minute range. I'm not going to move the stop loss down here to the low of the day. Just going to key off this range. What I'm going to look for is a 2-to-1 measured move. On the days that I get that it goes to the 2-to-1 profit target, on my calculator, I'll put a 2. The days that it triggers a long and stops me out, we will subtract 1. Okay? So, what did I just do? We are going to basically do a +2 -1, +2 -1. And if there's no trade that day, it's going to be a 0. There will be no trade if a bar not only breaks below the low, but closes below the low of that opening range. So if this bar had closed down here, this trade would not have been taken. This would have just been a 0 for that day. So we're going to start off again, June 2nd, long trade, triggered here, hit the 2-to-1 profit target, did not stop out before that. So this is a 2. And I'm going to remove that, move forward to the next day, and we're going to, this would have been a -1, triggered long here, didn't get close to the 2-to-1 before stopping out. 1 trade a day, so no re-entry, so we're at a 1. Okay. Get rid of that. Go to the next day. Okay, we got a close below the opening 20-minute range, no trade this day. So that's a 0. And here we did not close below. So we get a +2 profit target up here. So we can add 2. Let's go to the next day. Okay. We can see it hit a +2. I'm just doing this to show it. So another +2. So we're up to 5. And of course, at the end of the test, this little forward back test, a positive number indicates that had you taken all the trades, it would have resulted in a profit. So even a +1. A negative would indicate that it's a losing strategy. So 69.56. So this didn't trigger. This bar closed below, so no trade. That's a 0. This looks like a losing day. Didn't get close to the 2. Stopped you out here. So that's a -1. This would have, we're going to call it a -1. And one thing I would probably do is I would also be tracking range of the opening range. And whenever it was something like this huge bar, look at that range, 25-point range, probably not looking for a 2-to-1. I would probably create a rule that would have me either go to break even at the 618 or take a 618 profit. Maybe even take a 10 points if it gets there, regardless, something like that. But this is now, did I just subtract this one? That was this one. So I got to subtract another one, I believe. But again, this is just, okay. All right. And so the other thing this doesn't take into account is on that particular day, that would have been a massive loss, possibly would have wiped out all the profits. So again, size of range does matter. Right now, we're just trying to, this is really, do we have net positive winning trades in terms of just a raw number of trades, not necessarily based on actual P&L. Okay, -1 here. This is another -1, I believe. Yep. And then again, I would go through here and I'd say, okay, whatever the result is for the 2-to-1 target, what's the target? What's the result for a 1-to-1? What's the result for a, my favorite target is the 618-to-1. And so there's a couple of losing trades we've had that would have been profitable had I had a lower expectation. Okay, we closed below the 20-minute range, not taking anything that day. Closed below, not taking anything that day. Closed below. And so the other thing with this type of approach that I'm testing right here is that you have to be comfortable exercising the concept that has been referred to elsewhere as 0 trades per day. You have your model, you have your method, you have your particular strategy, you have your trading plan. If your trading plan doesn't trigger, are you okay with that? Are you okay if you don't trade for 4 days? You sit there and from 8 o'clock to 8:20, the range forms, And then within 20 minutes, 40 minutes, an hour, the market is set up in a way that you don't trade that day, and that's it. Are you okay with that? I used to not be. That was very difficult for me. It's much easier now. And I think I mentioned it in another video. There's an essay on Reddit called "Zero Trades Per Day Will Make You Profitable." My friend goes by the name JVT at Forex Factory referred that article to me a few months back. So now see, this would have been a 618 profit, would have been a 1-to-1, but it's actually a -1. It's a loss on today. So this again. So far, I think we've topped out at that 5. We've been stuck there now for a while. None of these closed below. So this would have triggered and would have been another loss. So -1. And another -1. Close below, no trade. 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 Okay. +2. Close below, no trade. No trade. Close was 78.25. Low was 78.25. I'm probably going to make that a no trade. I would usually say a close at or below. Below. Okay, these did not close below. There's a +2. I think that gives us, that might be the highest we've gotten to so far. A +6. Close below, no trade. Close below, no trade. Oh, that's it. So +6. So it's 6R from June 2nd through today, which for a day trading method isn't really all that hot, in my opinion, a 6R. And of course, I would do this type of approach of backtesting just to see, okay, do I now want to build a more detailed Excel spreadsheet and plot the max profit up to 2R. So now what I would do is I would go back to wherever the second was. Oh, 5:30. So the first was Sunday. So go back to here. And now what I would do, I would say, well, +6 is certainly enough to pique my interest. And what I would do on the ES, I would plot 4 take profit levels. So I would build a spreadsheet. Hold on a second. I'm going to pause the recording for a moment to get a template up here. Okay, so what I do is I keep a template for my back tests. I opened this, saved it as LBR OR test. So that's Linda Baines Raschke opening range test. I'm referring specifically, of course, to that 20-minute opening range that she identifies. I'd build a spreadsheet with the following columns. I'd have the date, of course, measure a half stop, full stop, plus 10 tick profit, a 61.8, a 1.0, and a 2.0. And these, of course, refer to 61.8% of the opening range, 100% of the opening range, 200% of the opening range. So these would be, this is what a half stop would be, full stop. And then what I would do after filling these in, I'd go to the chart and I'd see it reached So 50-50. So 10 ticks would be 52. So it reached your 10 ticks. And then it obviously reached all three of the other 61. So what I would do for my chart, here is I might take those and fill them in green. If instead well, let's do another day, because I think the next day was a stop out. So let's do one more day, and then we'll call this video fini. Okay, so here, oops, I got to turn on my 50%. I do have that in here on my risk reward tool, but I have it turned off on my default. So there we go. Okay, so full stop would be 5. I'm going to fill it in over on the other screen, so I just read it off real quick. So June 3rd, 2020. Why is it typing it in there? June 3rd, 2025. Half stop is 2.75 points. Full stop is 5.25 points. 10 ticks would be 2.5. 61.8. Well, that's where the fraction comes in crazy. So once we're going to call that 196.50. So we're going to call you, okay, 3.5. Full would be a full stop. I'm sorry, I just screwed that up. Sorry, guys, for taking so long. I know why I did that. I have to put my negatives in there, and that screwed up my columns. That's 5.5 actually. So is that right? 98.50, then I get 5.5. So 11 for the 2. All right, so I have these filled in, and let's see here. So 93 entry would have been 93.25. So I would have had to reach 95. 75. We did not quite reach it. So this is going to go, like, I'm going to take that day. I'm going to take these. That's already red. I'm going to do this. So we have, now we know that this was a losing day and we didn't reach any of the profit targets. So that's how I would do this. That's how I would do this. So I have different back tests I save. That's how I do it. This is a handy shortcut way of seeing whether or not you have something. Now, you could still have something if this had been a negative number, because we're measuring off that 2 to 1. But if you have a positive number doing a 2R to 1R, again, sort of like a blackjack basic strategy card counting type back test, where it's just +2 for a win, -1 for a loss, and 0. You don't do anything, add or subtract if there's no trade. If you get a positive number here on a 2 to 1 back test, you're going to have something special, I guarantee it, if you are measuring for profitability and win rate of the lower profit targets. And there are plenty of traders out there trading the ES, for example, who have setups where they're only looking for 8 ticks profit or 10 tick profit. I really wouldn't trade for less than an 8 tick profit probably, which is 2 points. Really not a big fan of the 10 tick profit target. But you can spreadsheet this, and if you make 10 ticks a day, you can make a lot of money very quickly trading the ES if you compound and increase your position size as you accumulate equity in your account. So that's it. Wanted to share that. Let's keep this thread on track. We are looking at trading fixed bar interval trading plans. So fixed bar interval is the methodology that we're looking at. All the different variants, opening range breakouts, MEBOB, different M60 ranges, like you could test the 60-minute range from 2 a.m. to 3 a.m. New York time. That's the first hour of the Frankfurt Stock Exchange trading, ending at the open of the London Exchange. You could do a 5-minute, 10-minute, 15-minute, 20-minute, 60-minute, 8-minute, 13-minute, whatever opening range. I do suggest you're going to find your best edges in the vicinity of market opens, in the vicinity of regular news bars, and at the open and close of 4-hour bars. So the 10 a.m. Eastern, the 2 p.m. Eastern. You're probably going to be better off keying off larger bar intervals, 30-minute, 60-minute, 15-minute, 30-minute, 60-minute, rather than the 1-minute, 5-minute. I know a lot of folks gravitate to those shorter bar times because they perceive lower risk, because there's typically going to be less range, say, in a 1-minute bar than a 60-minute bar. But that's not necessarily true. Sometimes the majority of a 60-minute range can occur during just a 1-minute bar within that range. But also, with the larger bar intervals, breakouts are going to be a bit more likely to move to a reasonable profit level before reversing. And that's it. But again, let's keep the thread on track. At some point, I say it in the beginning of the thread, I keep mentioning it, I would like to add what I call reversal bar methods to the discussion. But until we can, I'm going to just run with this particular thread in its current form until I can see that we have a good core group of people capable of following the method, developing their own strategy within that method. And then what I'll probably do is start a new separate thread, which will be a continuation of this one with respect to fixed bar interval trading, but it will add what I call reversal bar interval trading as well. But until we get to the point where I can really see that I'm not going to be bothered by persistent trolls and people insisting that somehow their little, their automated back testing charts somehow trump going through bar by bar, day by day, and tracking it for yourself visually and manually. We're going to just stick to this particular thread. There's plenty here. I myself don't trade the MEBOB strategy. I did look into it. That's why I started the thread. I wanted to look into it. The thread grew into something bigger and better and more important. But the reason the MEBOB strategy appealed to me at all is because I'm already committed to fixed bar trading, fixed bar interval methods. And MEBOB is a subset. It's just a sub-strategy of the larger fixed bar interval trading. And for those of you coming from indicator land, which I spent much of my life in myself, an example would be if you're familiar with, say, moving average crossover as a method, that's a methodology. It's not a system. It doesn't become a system until you say specifically, I'm going to trade the crossover of a 5 EMA over the 20 EMA, and then you have rules for how to enter. Are you entering simply on the close of a bar with the positive crossover? Are you trading both long and short? Are you waiting for price to cross? Are you waiting for the moving averages to cross over? Then price pulls back to the moving average, to the space between the moving averages. Laura's roadmap is very much a variation. It's one strategy in the methodological family of moving average crossovers, even though she's using bands, because she's also using a 200 SMA. And when you're using EMA bands, there's really an implied crossover because you're having price trading. Is price trading below the low of a certain range, or is it trading above the high of a certain range? Maybe it's the range of the 8 EMAs or the 5 SMAs. They're all variations of the same method. There's methods, and then there's strategies that use that method. And I think Forex Factory would be better if everyone could get on board with this distinction between, method and strategy, right? I think it would make things more clear for a lot of traders. But that's it. I'm going to quit this video here. Again, let's keep the thread on topic. I am exploring fixed bar interval trading strategies so that I can help others develop the particular fixed bar interval strategy that will fit their personality, their risk tolerance, their emotional stability, their did I say lifestyle, their time zone. Most of us are still working other jobs. Some may be retired, but most of us are still working other jobs. Some of you are young people in college, university. You have limited hours available. You can't trade 24 hours a day. You can't trade whenever the markets are at their most volatile all the time. So you need to pick your point, pick your place. And there's a fixed bar interval strategy for everyone that can completely remove discretion, where you'll know exactly when you need to be at your computer with the computer on, ready to get orders entered into the market. Furthermore, if you can develop your strategy so that it is long only or short only, then you will never have to worry about anything, assuming your platform has an automated trade management system where you can preset your stop loss and your profit target and do it for each day. If I'm trading this method, I'll probably have an ATM strategy that I would save as LBR-OR, Linda Bradford Raschke opening range, and I would probably have an automated profit target of $500 and an automated stop loss of $250. But before I enter this trade, as this 20 minutes is about to close, I'm going to put my risk reward tool on. I'm going to go and edit my automated trade management strategy. So if I'm looking for example, a 61.8 target, my profit target now is not going to be $500. It's going to be $150 or $162.50 or $175. I'll do the math. And then I'm going to have my stop loss is going to be $250. It's actually going to be $275 less a tick, so probably $287.50. And then I can set my entry order, just one order. If it's filled, I can be doing other things. I could be in class. I could be working. I could be, if I'm retired, maybe I'm on the golf course. Maybe I'm out walking my dog, tending my garden. But you don't have to do anything then. If you're a long-only trader, you set your order, you make sure your profit, you'll have a bracket order going in that will protect you against the loss, take your profits if it gets there. And then you don't even need to look at this until the next morning. You'll know what time to turn your computer on and be ready to enter orders again. And you can take a look then to see whether or not were you profitable yesterday? Did you take a loss yesterday? Or like for NinjaTrader, if it never triggered, the only thing I guess you would have to do is this. For me, I would watch, and if I did see a bar close below before it triggered the long, so I could just cancel my orders. But this can be personalized. This method, you can find a strategy and build a trading plan around it that fits your life like a glove. I mean, that's really what this is about. And by having completely rule-based trading plan with no discretion, you're going to develop into the type of trader, the only type of trader who becomes a consistently profitable trader over time. All right, now for real, I'm done. Let's keep the thread on track. Bye.